Hey guys, and thanks a lot for taking the time to watch this video. For those of you joining for the first time, my name is Ollie, and here on the Minted Millennials channel, we focus on all things personal finance and investing to help you on your journey to financial freedom. On today's video, we're going to discuss how to set up a brokerage account for beginner investors. I hope you enjoy this video. Cover 5 key points that you need to address when assessing what type of brokerage account is best for you. A brokerage account is what everyone that wants to invest is required to use in order to purchase or sell shares. It is done through a broker, whether it's online or an in-person broker, but the brokerage account is what handles all of this for you. The first thing you need to consider when choosing a brokerage account is what your investing style is going to be. If you're going to follow a micro investing strategy, that's where you're going to invest small amounts of money at regular intervals, no matter what the market does. Then you need to take into account that you're going to have a lot of purchasing of shares. So one thing to consider with this strategy is what fees the brokerage is going to have. Another key thing to consider in this strategy is whether there's an account minimum or whether the brokerage offers up fractional shares for you to purchase. If you're going to use lump sum investing as your strategy, where you invest large amounts of money at irregular intervals over time, then you should also consider what fees are involved, as some brokerages offer up percentages of the amount invested or a flat rate fee. So depending on how much you're going to invest, this could end up eating up into a lot of your gains. You will also need to know whether you're wanting to invest in individual stocks and ETFs or in index funds and managed funds. Knowing which one of these strategies you want to use will determine which type of brokerage is better suited to your needs. The other option is dividend investing. We have great dividend yields here in Australia, and it's an extremely powerful investing strategy. Most companies allow dividend reinvesting programs where you can reinvest your dividend profits without paying any brokerage fee. However, if companies don't allow that, then what you need to look for is whether your brokerage account offers up commission-free trades or if they enable you to buy fractional shares. If you're enjoying this video so far, then please take a moment to like the video, comment down below, subscribe and turn on the notification bell. Any support you can show this channel is really appreciated. The second thing to consider when choosing your brokerage account, and probably the most important, is the fees that are involved. Fees can significantly erode the gains that you make through investing, so it's critical to choose the best brokerage for you. Unfortunately for Australians looking to invest in the Australian stock market, we do not have fee-free trading yet. So we still get hit from anywhere between $8 to $11 per trade. Whereas for Americans or Australians investing in the American market, you can do fee-free trading. This is important to know because if you're looking to do micro investing, where you're going to invest $10 every week, yet get hit with an $8 or $11 transaction fee every time you purchase shares, you're actually going to be making no money. So that's why it's crucial to know the fee structure before you choose your brokerage account. If you are an Australian though looking to invest in the American stock market, there are a couple of options for you to get fee-free trading. Currently the only one is Stake, but there are newcomers eToro and then also Zinger's Dabble. These will all be offering up fee-free trades too. The one thing to consider there is you will get a FX fee when you transfer your money over to US dollars. Then for index funds and mutual funds, the fees range, but they typically range from 0.05% to 0.1%. So quite low fees, but it does depend on which fund you decide to choose. The third point to consider with your brokerage account is whether it has a minimum investment amount. The minimum investment amount varies greatly from brokerage accounts. Some require no minimum investment, others it's $500 like CommSec's investment platform, and there are others that maybe require $5,000 or $50,000 minimum investments. And just because the brokerage requires a higher minimum investment, it doesn't mean that it's going to get a better performance or return for your money. If you're looking to micro invest, you'll be looking towards a brokerage account that has no minimum investment. And maybe if you have a large lump sum of money, you might go and look at one of these funds that requires a $5,000 minimum investment. But again, it's all dependent on your own situation and your investing strategy. Another thing to consider when choosing your brokerage platform is whether it has any educational content within it. Some people might be happy putting their money into a brokerage account and not fully understanding what their investments are going towards, but for other people, they would like a better understanding of what they're investing in. There are a few really good brokerages out there at the moment doing a great job of educating their investors as to where their money is invested in and what is going on with the performance of the portfolio. So while this may not be a major deal breaker for some people, it could be the decider if you're unsure about a couple of brokerages that you're looking into, just to see how good their educational platform is. Another point you need to consider when choosing a brokerage account is the safety of your money within that brokerage account. Hopefully, if you're investing, you're using money that you can afford to lose, and that you understand the fact that you can invest in companies and any number of reasons could force a company to go bankrupt and you lose your money. However, when I'm talking about safety of a brokerage account, it's more to do with if your money gets stolen through theft or through a hacking or through the platform crashing, things like that. You can usually find out how much your money is protected for in the product disclosure statement down the bottom, the very, very bottom of their website or in their FAQs in their apps. Most respectable brokerages will have a protection up to about $250,000. So if you're looking to invest larger sums of money than that, then you should probably have a chat to the brokerage directly to see if they'll offer up any higher level of protection. But I'd say for most people, that's a really good starting point, knowing that your investment will be protected for any foul play up to that amount of money. So there are a few points you should consider when trying to choose a brokerage account. Let me know in the comments below what brokerage account you guys are currently using and whether you want me to do a video on recommendations for brokerage accounts. Thanks so much for watching this video and for supporting the channel. I hope you got some value out of it, and if you did, please feel free to share with family and friends. I look forward to making more content like this for you guys in the future. See you next time.